Alright, today we're looking at what to buy. Now, you might not have thought about it, but there's actually a lot of options when it comes to buying real estate. There's apartments, new builds, units, cross-lease, land, freehold in the suburbs, home and income, multi-units, commercial, industrial, business-related, leasehold. There's dozens of different categories of property types that you can look at. And for each of these new types, you can break them up into other subcategories like new versus existing, small versus large, central versus rural, proven areas versus unproven areas. There's a lot of rabbit holes you can go down when looking at what properties to buy. Now you're going to have to, based on your borrowing power and your time commitment, you're going to have to make decisions on what to buy. And it's going to be based on market cycles and about your location and about your willingness to do research. Apartments, for example, not many real estate commentators are that excited about promoting the idea of buying apartments, except when the cycle changes and apartments can become relatively cheap or high yield. So, one of my friends, he looked at dozens of different apartment projects. He had a very comprehensive spreadsheet. He did all the numbers. He got one under contract just 1 month before it finished. Somebody had to sell out of that deal, and it was a dual key apartment, which basically it's two apartments joined with one small internal lobby. He owned that apartment for a month, and I think he sold it for $100 grand net profit, just because he knew the market and he strategically bought very well. Most of the time apartments can be a bit risky unless you're really well versed on body corporate and you understand any structural risks, and you got to understand the market cycle. If you are keen to use a property manager and you understand the minutes and the obligations of owning something jointly, you just have to understand that the yield should be a bit higher because capital gains on apartments is generally a bit lower than dollar for dollar like investments in the suburbs and in stronger areas. New builds is one of those question marks of whether new builds are a good investment or not, because they are often not the best yield. They are often, capital gains is a little bit restricted because new builds are often on smaller size plots, and with new builds there's not that much room to add value because it's brand new property. So new build is a perfect investment for somebody that's extremely time poor and needs a result quickly. But if someone's going to build a big portfolio and maybe their income is not going to be going up significantly anytime soon, then new build is questionable for a lot of people. All of these different things of what you can buy, you can make money if you know what you're doing. If things are undervalued and you're getting a good discount on the way in, then they're all good investments. Cross lease, for example, you can buy a cross lease and then you can work with the other owner or owners to separate those property titles and get something freehold. You can create good value there. Buying land, as long as it's in the right area and as long as you understand the capital requirement, it's usually a bigger deposit. Maybe you can get a bit of income if you can get some business or storage operating from there. Freehold in the suburbs is great for development potential or adding further income, as long as you understand the obligations of the council and what you can do there. Home and income is a strategy I think works for a lot of people, because you might buy home and income as your own occupied property, which means smaller deposit required. You might rent out the 4-bedroom part and live in the 2-bedroom, or vice versa. It's a great place to start for newer investors. Multi-units is like a traditional favorite of established investors that are more yield and consistency focused. So you can buy something that's got say 6 in the block, and if 2 of the tenants are not there, you're still getting your rent base. So that can be exciting for people that really got to make sure the dividend keeps coming. And if you're paying cash for a small mortgage, that's a good option. Commercial and industrial and business related is more specialized for people that have certain level of knowledge or expertise in those areas. I do own an industrial property, and I was lucky enough that I bought really well and I created a lot of equity in that transaction. But it doesn't mean the headaches stop, because there's a business operating there, there's obligations. So I did have some knowledge that was more than Joe average to make that risk of that investment of buying an industrial property. And I will be focusing more on commercial and industrial in the future, because I see it as being technically less competitive than the freehold suburbs buying. Leasehold, I think not much needs to be said about that. Unless you know a lot, they're not great investments because you don't own it in the long term. You've got to ask yourself before you make any commitment what to buy, what homework have I done, and what mistakes am I anticipating and trying to avoid. And one process you want to start doing is start crossing things off the list that you know that you're not keen to look at more, and then start dividing up those columns based on what you're going to dive into a bit more. For example, you might look at cross lease, you might look at large properties so that there's development potential. Obviously they'll be existing, they're more centralized location, proven areas. So if you bought a cross lease property in Ellerslie, for example, and you had to pay 1.5 million for it, but you spent 100 grand jointly with the neighbor, and then you could sell it for 1.8 million, or you got it revalued, then that's a really good investment. You don't have to hold it forever, but you've created value. And those things are easier to understand than buying an industrial property, for example. So you don't want to be competing against other investors that know a lot more about those specific types of investments. If you're going to do a cross lease to freehold, you really got to do a lot of homework before you make that commitment, and that might be as simple as talking to a few consultants. Might only be an hour or two, and might be a couple $100, but you'll know more than most people that are still at this stage of I don't know what to buy. So if you've got questions about any of these or any different types of what should you buy, let us know in the comments. Before I let you go, I wanted to say one thing. So before you start talking to the agents or anyone that is marketing property that is specific, just take into account that if somebody is going to make a commission of selling you on one of these ideas, it's highly likely they're going to be very convincing, and they're not going to touch too much on the mistakes or the pitfalls of that particular type of property. They might at a high level help you understand and identify a few things, but just got to be careful, especially when financial advisors are recommending specific property types. Is often that their judgment is clouded by the commission. Even if they own one of those properties, it's often because they got a discount on the commission, or that they just believe their own guff. It might not necessarily mean that the numbers suggest that it's the best thing for you. So tread with caution when you're getting advice from a barber if you need a haircut, if you know what I mean.